higher high, and higher low, higher high again, higher high again. So we can say, remember I said that when price tap into a key level like this and then sweep without giving us that push to the upside again, it is considered as what? A sweep. You can go back and watch my previous video to understand that. Then now this is a lower higher low. You can say this is a higher low. So far this price was higher than this previous one, so this is a higher low. So you can see this low, it is not a higher low, this is a higher low, but this low failed to go above this high. So you can see how price came back, took this low, which means that this was what? A weak low. And this was also what? A higher low, right? It took these two lows out and then did what? Gave us what? A break of structure and then a sweep. A sweep and then a break of structure again to the upside. So sometimes you will see that the market will play with you, right? The market will want to play with you. Market playing with you simply means you can see what happened here. So now you consider this as a break of structure. Yes, this was a break of structure, right? This was but price actually used previous market data, previous level to price actually react to this previous level. Anything that might have pushed price up from this level simply means that there is a structure that price reacted from, right? So but see what happened here. A break of structure to the downside, and this was what? Our lower high, lower low. So now if you consider this as a break of structure again, then you're wrong, because this low gave us a break of structure to the downside, and in next thing again, it went back up, used this demand zone to drop. Then this lower high, then this lower high gave us what? A sweep of liquidity here. It gave us what? A sweep of liquidity, not what? Not break of structure. This was a sweep of this low. Price swept this low and then used this leg now, gave us what? A break of structure and another break of, this is shift in market structure, and what? Another break of structure. Price continue going what? Going back to the upside. So you can see that price did what? It cleared this high again, giving us what? A new market movement. So this is what? Another bullish move. This, and this. Then what? A sweep of that high. After the sweep, what happened? This is a weak low because it did not actually break structure. This low did not break this structure. So if you consider this as a break of structure, it simply means you're wrong, because this low did not break this structure. So you can see it took out this low, and then this is what? This is shift in market structure again, shift in market structure. So you can see this expansion. This expansion simply means that there's nothing up here that price is going to come back to take. So price used this mitigation, this other block here, to react, continue dropping, right? So if you understand structures, you will understand that this was what? A shift in market structure, signaling that price is about to go down. So we can also check this on Euro USD. Let's check this on Euro USD, right? This is Euro USD. So let's look at the uptrending movement. Let's look at this. So you can see how price was moving in an uptrend. This was what? A sweep, not a break off. This was a sweep, right? This was a sweep because price did not actually have a candle close above this previous high. So you can see the low that created that swept this high. Price came back, took it out before going up, before giving us what? A clean break of structure. After this clean break of structure, price did what? It kept moving, and then it gave us what? A sweep, and this was the high point. Now, if you pay close attention to this structure here, you will see that price did what? Price gave what? It gave us what? A liquid sweep of this high. So you can see sweep of this high simply means that this low automatically is a weak low. It is a weak low. So you can see how price came back, took it out, went back up. Instead of this low again to create a new high, it failed. So immediately it failed, it simply means that price is about to go down. So I won't take trade at this point. I'll wait for price to give us another break of structure before I consider taking any trade. So you can see what happened. A break of structure, price came back, used this, mitigated this zone. This is a key level, it mitigated it, and then gave us what? Another break. Came back up, used this key level, and then drop. So if you took this trade at this point, you would have made good money off it. You would have made good money targeting this low. You would have made good money off it. So you keep following the market structure just like that. Mark another key level here, and then a break of structure. You can see a break of structure or a sweep, and then you can see the last body candle to that upside signifies what? That's our supply zone, which is a key level. So when I mean advanced structure and key level, it simply means something like this. Now, example, we have a downtrending market, price is moving downward, and for every area that price is reacting to simply means that it is what? A key level that is sending price down. Then another push into a key level, price push price down again. Breaking structures, engineered liquidity. Another one again, a key level around this area, and engineered liquidity, breaking structure to the downside again. So now, if price is playing around this zone like this, going down, showing that it is in a bearish market, then all of a sudden, then this low pushed back up again, created an engineered liquidity, came back up, reacted to this key level, and then this lower high now failed to create a new low. So what do you think is about to happen? What is about to happen is that now if you took entry here and then you failed to take your profit before price even reaches that level, it simply means that if price does anything like this, coming back up here, it means that either price is coming back to take this high, right? Take this lower high, which means it is a break of a shift in market structure, which means it is what? A shift in market structure. This is a shift in market structure, and then does something like this. Coming back inside here, if price is looking for an order block or a key level, price is looking for a key level to use and do what? Send price up again. So this is what price is coming back to look for. Price is making a pullback into a key level to take it and then use that key level to push price back up. So I usually like ask people, how do you frame higher time frame? Daily bias. Framing a daily bias, that is going to be a different topic on its own, because a lot of traders always find it very difficult to frame daily bias. Now, if you want to frame a daily bias, it's either you use market structure, just like what I just finished explaining here, right? Or using previous candlestick pattern. Now, what I mean by using previous candlestick pattern is you have to start on a daily time frame or weekly time frame to know how previous candle closes, and then look at how this today's candle is going to close, or use previous yesterday candle to predict today's candle, what is going to happen. That is going to be a different topic entirely. I'm going to talk about this on this channel. So if you really want to get a lot of value on this channel, make sure you always watch my video whenever I drop a new video, because I'm going to make sure that I drop videos at least twice in a week for you guys to learn. And also, if you want to get more value, you can check the description to join my Telegram community, where I drop setups on the trades, key levels I'm looking out for, what I'm waiting, what I'm seeing on this pair, and also things like that, right? So how to frame a daily bias is using either a structure like this or using previous candle to predict or react to how today's candle is going to play. So, but this video we are talking about structure and key levels. So like I just finished explaining, that if market is in a downtrending market, if price is in a downtrend like this, and all of a sudden you now see a shift in market structure, it simply means that price is about to change. And at that point, don't try to mark any key level at this area, because all these areas have been mitigated. All these zones, all these levels have been mitigated. So a mitigated level is not going to hold price. It is even a liquidity for you. This video, I'm not talking about liquidity. But you have to understand, once price have mitigated a key level or a supply and demand zone, it simply means that those levels are not going to hold. Like, I have taken like two. So it simply means that those level will not hold, right? Sorry, I had network issue. So when price give us what a shift in market structure like this, it simply means that that level is not going to hold. A mitigated level is not going to hold anymore. So don't try to come here and say you want to mark this supply zone, you want to mark this supply zone, you want to mark this supply zone and to sell. Just like what is happening here right now. Okay, let's look at this Euro USD now, the current market price. Now this is 1 hour time frame. Now see how price was bearish, break of structure, break of structure, break of structure, break of structure. Price keep mitigating those levels. In other words, price came, okay, look at this, pay close attention to this level. Now price tapped into this key level and then did what? It gave us what? A sweep. After this sweep, price pushed back up. This lower high failed to give us what? A new low. See what price did? Price went back up, used this level as liquidity, then used this candle as supply. came back down, gave us what? A proper break of structure. Now, all this, you can see an engineered liquidity that price came back, it took this liquidity out before giving us what? This one gave us what? A break of structure. Price came back, took all this liquidity out before this spike down. Now see, this is what? A break of structure, and then what? Another break of structure to the upside. You see what happened? Now, you would have marked this level as supply. But you have to know where liquidity is building up, because price built up liquidity around this point. You can see that price failed to mitigate this level and then move past this level just to clear this liquidity before dropping again. Now price dropping again, it came back down and then started going down, giving us what? A sweep. Because this is now a sweep. After this sweep, what happened? Price gave us what? A shift in market, a break of structure, because this was already a shift in market structure, and this is what? A break of structure. Why I say this is a sweep of shift in market structure is because this lower high gave us what? The last low here. Even though this is the last low, but this is what? A sweep. This is not a break of structure, but this is what? A break of structure. That is why I say this is the last lower high gave us what? This break of structure, and this is now what? A shift in market structure. Now price gave us what? Sweep of this low, break of structure. Now if price is coming back down here, has already given us what? You can see that we have an imbalance here. Price can do something. You can see how price is breaking structure. Price can do something like this, come back here, use this imbalance to push price back up again. So price can do something like this, coming back down here, use this imbalance, FVG, to push price back up again. So you must understand structure and liquidity, structure and key levels in the market, right? So before I round up this class, this is what I mean by structure and key level. If market is moving down like this, and all of a sudden, this lower high failed to give us a new low, then price come back here, take this high, take this high, it simply means that price is coming back, it's going to retrace back, look for a demand zone or a key level, use that price to go back up, target this high. When price is coming back, this is what? A liquidity, and it is a high that price is going to target to continue going. So when price has given you what? A shift in market structure like this, don't try to mark any key level around this level, because all these have been mitigated. Even plus the one that have not been mitigated, price will only react to it and then do what? Keep moving to the upside. So that is why you see sometimes your key level or your supply or your demand zone keep falling, because you are trying to trade a unmitigated level that price has already given you a shift in market structure. How do you think that price is going to use that unmitigated level to shift or send price back down again when price has already given you what? A shift in market structure. It doesn't work like that. I didn't want this video to be that long, so I'm going to end it here, and then in our next video I'm going to talk about how you can look at these things, key levels, and then where you have key level like this, there should always be what? A liquidity or an engineered liquidity. Your key level should have what? An imbalance. Your key level should have what? An engineered liquidity. So there are a lot of things to factor in when you are trading key levels. You must use structure to identify your key levels. So before I round it up, let's look at this key level here. Let's look at this. This is a key level, right? This is a key level. This is a key level, and you can see how price engineered liquidity here. This is also a key level. This is also a key level. You can see how price engineered liquidity here, right? Now, let's go to 15 minutes time frame. Price did what? Sweep liquidity. And then what happened after the sweep of liquidity? Now price has given us what? A break of structure. Now if I'm to take my entry, I can wait for price to come back down here, use this level or this level here, take my entry around that level on GBP Euro USD, or look at GBP USD. I was currently on this trade, right? We took this trade with my VIP member sweep, and then a break, and then a key level here, which is an order block, an engineered liquidity here, a BOS, key level, another one here. Now these are all mitigated level key levels, right? These are all mitigated key levels. You can see how price came back down here, mitigated that level. So are you trying to tell me that if prices come, if anything could bring price back down again, that price is going to respect any of these key levels? It can only react and then do what? Drop. Come to this one, it will only react, and then what? Come to this one, and then it can only do what? React. Once you start seeing something like this, it simply means that price is going to what? Drop. So you can't start buying at all these mitigated levels. You can't start buying at these mitigated levels. You can't start buying. So you must understand structure. You must understand levels. These are key things to consider when you are trading structure and key levels. So until next one, we are going to end this class here, and then please make sure that you take your time to watch this video again so you can understand everything I said in this video. And trust me, I'm going to be dropping content every week to make sure that you guys learn and become a better trader. Click the link in my bio in the description to join my free Telegram community and get more value there, right? If you want to reach out to me, you can reach out to me on Telegram. See you guys.